Hi, good evening, everyone. This is Lloyd speaking. Give me a minute. Let me just set up something. I'm going to share an Instagram post, not my Instagram post, but rather Instagram post that I saw. Just give me a minute while I set it up. Okay, so here it is. Where's my screen? Yeah. So I actually saw this post by Peter Brandt. You can go and Google who is in. So the theme is that, look, Bitcoin's up. I think Bitcoin by and large is considered by the current batch of traders to be our safe haven instead of gold, instead of silver. Global stocks are up. Precious metals prices are up. Raw material prices are up. So what is a common theme that, but I wouldn't say the demise of the US dollar, but I would agree with the devaluation of the US dollar. Simply saying means that US dollar is going to get weaker. You can see time and time whenever there's a crisis, they're going to have huge stimulus bills coming up. That means money that's flooding the market. There's more and more US dollar in the markets. Yeah. So actually, this leads to my next topic, which I want to talk about while I'm waiting for Orlando, is that what are you guys, or rather, how are you guys doing with your spare cash that you're waiting to either trade or invest, but not really doing anything else? Do you do anything with it? What are some of the options that you have, or what you have done? I'll be sharing mine. Do you all have some other methods that you can share? Yeah, if you have, just type it in. Yeah, that means what I'm asking is really funds that you have, spare cash, are waiting for the right opportunity to strike in the market. Yeah. For me personally, as both a trader and an investor, I always have, not always, usually I'll wait for the right opportunity to trade. But in the meantime, I don't put my money in the bank. So what I do is actually, I don't know whether you have heard of it, money market funds. Yeah, these are short-term trading of debt instruments, not you trading the debt instruments, but rather the funds themselves are trading the debt instruments. And these are actually highly liquid. That means you can actually cash in and cash out anytime you want. And most of these debt instruments are actually short-term time frame. Yeah. So treat it, I'll say treat it, look at it as though it's a fixed deposit, but you don't have a fixed tenor to wait it out. Yeah, you don't need to wait for like 6 months, 1 year, or 2 years, that kind of thing. But in returns, for the way that you can withdraw anytime you want, the returns aren't great. Yeah, usually it hovers about 1% per annum. Yeah, you can look at it. This is only accurate as of this year, February. Yeah, so you can see that this applies to Singapore. So for those of you who are overseas, you might want to find out what other alternative you have. Just go and Google money market fund for your own markets. See what you can do. Fantastic, but me being a trader is that money is money. Leave it in bank is basically just gonna rot. So if I'm gonna earn even 0.1%, I'll earn it. So per annum 1.3, I'll just use the extra cash to buy tidbits. It's still money to me. Yeah, so just want to share, this is the way that how I usually put my idle cash aside. Yeah, I don't use the bank. I'll use this. Yeah, so this is something that you can explore on your site if you want. Now, what I'm going to talk next is that how many of you actually look at a monthly chart? Have you ever looked at a monthly chart and attempt to trade from it? Not just analyze from it, but trade from it. Have any of you actually do that? If you have ever dreamed of or thought of getting huge returns, that means those 10:1 trade, maybe 10. I mean, sometimes I get it, not all the time. 5:1 and above. You should really look at the monthly chart and analyze from there. So this is something which I do at the start of every month. It's not anything complicated. In fact, it's a bit of a reversal trading. Yeah, I'll just share with you what I actually do. So it's like all these Swiss. Yeah, these are the ones that I point out. Is that just look for levels that price might possibly bounce off or trade off. That's all I do. So you can see that in the past, support and resistance. So this is the level whereby, oops, this is the levels whereby I will have traded all these Swiss in the past. Yeah. So when price comes here, then not that I expect price to fall, but there's a tendency for price to fall. Okay, there's a high tendency for it. So for this month, Aussie Swiss, what happens is that, look, we're at prices at the moment. So I'm basing just off 2 bounce point. Price broke, come back, is on this level. Be it whether you swing trade, that means usually swing traders are people who deal with 4 hours time frame, or you trade 1 hour. These are levels that you can keep a lookout for. Yeah. So once price actually reach this level, then you can start to drill down. So in this case, I'm going to go short. Just trade the first lower high. That's all you need to do. Trade the first lower high. And from there, you observe what happens. So I just use this as an example. Hey guys, if this is not useful to you, you can just tell me, Lloyd, shut up. This is not useful. Skip off. Okay. I'm just sharing what I do as a rule of thumb when I attempt to trade reversals. You can see that when price comes to here in the past, then drill down to the weekly time frame. So when you drill down the weekly time frame, what you're anticipating is for price to actually go to this level and then giving you a lower high so that you can trade from it. That's all I'm, strictly speaking, that's all I'm doing. Right? So from here, we're just waiting for price to go to that level. Okay. The one kind of bar whereby I want to see is not this kind of small bar. What I want to see is this kind of, how do you term this kind of bar? Power bar or just a full body bar? Yeah. What I want to see is this kind of full body bar that goes into the level which I mark out. Yeah. So once I see this happening, then I'll be anticipating a lower high. That's all I want to trade. That's all I'm waiting for. So in this case, I just go to the 4-hour time frame. So you can see from here, I'm waiting for a lower high of this chart. Okay. So I'm not trading within this area or this horizontal level if you're using horizontal level. So this can be one trade whereby I've taken. So it's, if you look at the MACD over here, this is in line. Price goes up, and the moment it starts weakening, that's where I'll be keen to enter. But price didn't go very far, then I'll actually exit the trade already. What I want to see is this kind of momentum move. If it doesn't really give me such momentum move, I don't want to stay in it for long. All right, so I'll just give you another example. So all this is, you can see that on the monthly chart, price has already I'm on the weekly chart. So let me switch to monthly. So the monthly chart, price has go up. So what I do, drill down to weekly. Yes, this is the kind of bar that I want to see. Then I'll wait for 4 hours for price to do this. Not necessarily that I need a retest. What I really want is a lower high, and then I'll attempt to trade. Does this make sense to you? Right. So Aussie Swiss, crap, I delete that. Never mind. So Aussie Swiss is one that you can look up for. Cat Swiss. Wait a minute. Again, so cat Swiss, this is one thing that you can look out for over here. Okay. Price is almost going to the level that I would want to trade a reversal. Start drilling down. You can even go down all the way to the 1 hour time frame. No issue with that. Swiss yen, this will be interesting. Actually, I marked up the level just now, just that I accidentally deleted it. Yeah. So Swiss yen price has already go down, retracement. Look to trade the second or third retracement. This is also possible. Pound Swiss, horizontal level. Pound dollar, you can see that on the monthly chart, price is approaching a level fast. Just let me delete that. So once price hits this level, look for the first lower high. Or sometimes when it goes to bottom, then look for the first higher low. To me, that's a rather straightforward way of trading. These are my prior analysis. I can delete that. So this. So until the monthly bar has closed, this analysis will be valid throughout. Yeah. So Kiwi Swiss is something that I'll be really watching out for. Yeah. In fact, if you go down all the way 4 hour time frame, this is what prices does. Don't be so attached to the idea of horizontal level. Yeah. Be more attached to the idea of market movement, the structure of price. You're really waiting for the swing. Yeah. If there's no swing, forget it. You don't try to force in a trade. Kiwi yen, again, this will be an interesting level to see whether price hits all the way up to it. Yep. So you can start looking out for Kiwi yen also to see if once price touch or even close into the area, look for the first lower high. Dollar Swiss. Let me get rid of all this. So this will be what I'm looking out for. Okay, so this will be all these concepts are just simple that you can either trade from horizontal levels. Of course, there will be ranges, then previous support and resistance. That's also viable. Yeah. So let me have a look at the chat. How do I pronounce your name? Lived or live it? I'll just give you an example. US dollar SGD. Yeah, this will forever be one of my favorite charts to trade since I'm in Singapore. So this is what I've done in the past. All right, so this is the level, and then it's marked out. Okay, obviously, it's not now. There's really nothing much I can trade from here at the moment until price reach below. Then I'll be interested to look at it. Yeah. So then when this happens, okay, when I'm anticipating for price for March, during March, I'm anticipating for price to actually hit up, okay, reach up. So you can imagine in the middle of the month, when I saw at a weekly chart, price is going to this level. Okay, like I mentioned, you drill down to a level. Okay, so just now I did point out that this is the kind of full body bar that I want to see that price goes into. Okay, whether you want to term it as high volume bar or full body bar, that's completely your choice. Okay, from there, the time frame that I opt to trade is 4 hours. Right, so I see this happening. Price goes into a level, go to the 4 hour immediately, and this is how I use my MACD essentially.
Hey, Loy.
Hi, Orlando. So I'm just sharing with them how I trade reversals in a way, or levels. Okay. So you can see that price goes in a level. I want to see lower high, which I get my lower high. So I see have a look at the MACD. Okay, price goes up, so it's actually strengthening. So you can term it as retracement, whichever term you like, up to you. Over here, when MACD goes for a sell-off, which is this full body bar, that's where I'll be interested to actually jump in. Ta-da! Then go short positions. And usually for such trading, I will go for 3:1 or more. If I feel like it, then I'll go for 10:1, depending on how price moves. So 3:1. This one I wait for a particularly long time for the trade to actually play out. So you can see over here, 3%, thereabouts. Yeah, it took really, really long while I was sitting miserably waiting for a trade to play out. Yeah, so this is one example I can give you, USD SGD, because I always look at this pair. Simply, I'm a Singaporean. Euro USD on the monthly chart. What do I have here? Oops. Yeah, I don't see anything really interesting for me to have a play on monthly chart. Yeah, at least not for the reversals that I trade. So I can't comment anything on that. Hey Orlando, how are you?
Hello, can you hear me?
I can hear you, but the sound is really messed up.
Now? How about right now?
You sound like a hollow man.
Yeah.
Now you sound like you're in a rock concert, which is really messed up, by the way. So the MACD is not referred after. Usually, I will refer to MACD for taking the entry. Then after that, I'll leave it. I will use MACD for entry and exit while I'm doing intraday trading. Yeah, that means 15 minutes trading. Then I will use the MACD for exits. Yeah, because MACD to me, I read it as momentum. If the momentum is lost, then forget it. I will exit the trade while using MACD. Yeah, but for swing trading or reversal trading, I don't use MACD, because for swing trading and reversal trading, what you must understand is that you are strictly trading the market structure. Yeah. So that in that sense, the MACD is useless for exits. For entry, possible. Yes, you can use it, not for exits. USD yens. So, wow, I think this was one of my previous analysis. It worked out. No, guys, I have this magical ability of forgetting my trades once I place them. Yeah, I can't seem to actually remember anything for long. Dollar yen. Some of you may look like as this is the level, but to me personally, I don't like it. Yeah, I mean the spikes do confirm that this is the level, but I'll prefer for you using this. Yeah, so really I'll prefer for price to come down simply because there's two touches over here. Yeah, it's hard for me to actually ignore this spike. Yeah, so that's for you, SF. So until price comes all the way down here, then yes, I'll be looking for a structure change for me to actually go on a long trade. Otherwise, for reversal of this nature, I will just really stay out. At then, what I can say is that at then, because there's one touch, two touch, back in August 2019, yes, I would have looked for a swing trade over here. But once this pierced, then I'm really not that interested. So, and these are not very hard, tough way to trade. Yeah, just looking for on the monthly chart levels, then drill down all the way to 4 hour, 1 hour. Ship. Right, so that's what I can share with you all today. And Orlando seems to be having issue with his mic, so I don't know whether he can join us.
Yes, I'm having issues. Can you hear me now?
Oh, now you're clear.
Oh, finally! Thank God. So I'm having issues with my whole setup. I don't know why, but well, finally I'm here, and I want to share something really quickly, if I can.
Please, you got 9 more minutes.
I know. So basically, this is what I want to talk about. This is the E-mini S&P 500, and I believe that there's a good opportunity here after the rally that we have seen, right? So this was the election rally the after-election rally, right? And this right here was the spike to all-time highs on the news about the Pfizer coronavirus 19 or COVID-19 vaccine being 90% effective, right? But then yesterday and today, the S&P 500 just pulled back from all-time highs. That's from high to low. That's a 4.50% pullback in the S&P 500. But here is why I think there's an opportunity here. So the first thing that I noticed is that we closed that gap, that weekend gap, right? Well, it was closed the week. No, it actually wasn't closed. The weekend gap was not closed from the open on Sunday. The S&P 500 started to rally. And the gap was closed actually right here yesterday. It was closed yesterday, and again, well, the S&P 500 closed the gap. Let's go to the hourly chart actually. Yes, that right here you can see that it wasn't closed. The gap was not closed. So the S&P 500 closed the gap, and it retested the gap later yesterday, right? But the thing about this is that right here on the hourly, it looks very, very choppy, right? But here's the thing about this, or here's my rationale about this. Now, to be completely honest and completely transparent, I'm already long the S&P 500. And here's my rationale, right? Even though we have been chopping inside of that range, which is a big enough range, later yesterday and all throughout today, we started to print higher lows, right? And this is on the lower time frame, right? On the lower time frame. So, and this is what I'm looking right now, just as a justification that I'm on the right side of the trade, right? So we started to print higher lows, and the highs were flat. So this is a flat triangle, which is, in this case, in this flat triangle case, a bullish breakout structure. And then this 50-minute candle, this hourly candle, broke with the highs, with this red zone, and has now retested these highs. So on this lower time frame, on the 1 hour time frame, I am liking the upside on the S&P 500 for today's open, right? For today's New York session, I'm liking that. Now, having said that, where do I see the S&P 500 going? Hold on, let me just get rid of that. If this is in fact the pullback that I'm waiting for, or if this is in fact the pullback that where big buyers are going to jump in and bulls are going to jump in, and if this is in fact the pullback level, which could eventually be, right, just to calculate the the zone that we pulled back on to a 61.8 to 76.4% retracement, right? If this is in fact the pullback zone, I could see the S&P 500 rally to the 3770 level. Now, why? The thing about pullbacks and targets, right? For me in specific, is I look for that that sweet spot, and in my case, the sweet spot for pullback buys or for dip buys in this case is a retest of the previous. All right, so here we go. Is a retest of the previous highs because I'm trying to dip buy the S&P 500. Is a retest of the previous highs. Try these ones right here. And in this case, we have that yummy gap fill and a retracement no deeper than the 61.8, right? I don't like 50% retracements, or and the Fibonacci retracement levels, you know, are there just to just as confluence on my trade idea. So this is my pullback zone when I'm looking at deep buyings or selling rallies, right? And if it confluences with a previous level or a previous high in this case, and I see a double bottom, etc., I will take it. Now for targets, of course, that we don't know if we actually are going to rally to all-time highs and break all-time highs. So I mean, I'm going to take some of it around these levels, but ultimately, I'm always looking for some synchrony or symmetry between pullbacks and impulsive moves. In this case, the pullback to the 61.8 to 76.4, and an impulsive move to the 161.8 retracement, which is, well, I mean, this 161.8 retracement is in fact achieved on a 161.8 right there, you know, extension. It's the same thing. So I could see the S&P 500 rally in the very short term to the 3770. I am not forecasting anything. I am not a forecast. I don't know what's going to happen, but this is my play. I mean, my personal play on the S&P 500. And the reason that I look always for that 161.8 is because I'm not an investor. You know, I trade the market, right? And because I've done the research, the backtest, and I know that when these levels or these targets are hit, in a bullish case, we always get a deep pullback, which I am not comfortable staying in on that one, because this is the move that I'm looking for. And this is my play for today, Lloyd, actually, that long on the S&P 500. I also was looking at the GBP USD, but this Forex, I don't have any more time. I have a minute, so I'm gonna make it this right. Make it well. I have already annotated my chart. That's cool. So the GBP USD, you know, just hitting a big level, the 133, which is a previous base. If we go to the 4-hour chart, you can see that this is a previous thick zone, right? And it hit it right there on retesting the structure. And because of last week's or the week before, I think it was last week's increase of $150 billion in asset purchases by the Bank of England, I remain very bearish on the pound. So I think that this is a nice short trade or short opportunity on the pound. And that's it for me. Shit.
All right, thank you, Orlando. And just nice, we are ending at 9 p.m. Thank you, everyone, for joining, and we'll see you next week. Goodbye.